very happy that again you came here today on the show. Wanted to talk about some things here today with you. You're an attorney based in Houston, right?
Yep.
So Houston, and obviously, I did personal research on Houston, and obviously Houston is a very attractive place right now. Texas in general, like I obviously being out of state, but I see lots of businesses are moving into Texas for obviously tax purposes and people and food and probably the culture as well. So Houston is being one of those places, but is also known, as far as I know, is boom and bust town, right? Which again, and part of that was the history back with the oil, but also with the real estate, right? So maybe to start, like, what do you see currently happening in the scene? Like, if it's Houston or Texas in general, right? Because is there much construction happening? Where the deals are taking place right now? Are investors are actively looking for deals? Are people investing, or are they kind of waiting for a different cycle to change?
Yeah, these are extremely smart questions. So thank you for doing all that research. I don't pretend to be a macro economist or a rate trend predictor, although I do have a degree in economics. So Texas in general, as part of the Sun Belt, United States, people still we still have net migration from the rest of the United States. People move here, and then we probably have a good amount of illegal immigration from the South, which is not tracked particularly accurately. So it's probably more than what the statistics show. So we have a lot of population and people continue moving here. Just anecdotally, driving on the highways continues to get worse in terms of too much traffic, even as they expand the lanes and add new routes. They just get clogged up immediately. Texas is a no state income tax state in the United States. So somebody that makes $1 million in New York and pays, around 10% average tax in New York, if they made $1 million in Texas, they would essentially save that 100K they would have to pay to the state of New York. So they automatically make 100K right off the bat, more or less. And then the cost of living in Texas is still very reasonable. Dallas and Houston are the fourth and fifth largest metroplexes in the United States, and Houston's cheaper than Dallas in general, but they both offer significantly lower cost of living versus the higher ones like Chicago, Los Angeles, New York, and it's also much cheaper than San Francisco, Washington, D.C., Miami, and places like that. So that's the reason, I moved here 11 years ago. I had no prior connection to Houston. I don't think I've ever been to Houston until I moved here. So the day I got off the plane, it was in April, and it was so hot. And I said, I must be in the right place because that's mostly what I knew about it. In terms of boom and bust, that has a degree of truth because the economy, the largest sector is oil and gas. So when oil prices go up, the economy here is great. When oil prices go down, it goes down. Over the past 30 years or so, the industries here are definitely more diversified. So medical became a very large industry. There's quite a lot of large companies based here that don't necessarily have a connection to oil and gas. We also have NASA stuff, so
Yeah.
space related stuff. So depending on the administration and how much the government wants to invest in space, that could add a lot of money or subtract a lot of money.
Yeah.
Dallas, apparently, they're starting a stock exchange, the Texas Stock Exchange. They're going to do that in Dallas. So I just feel like there's a lot of tailwinds for Texas in general. A lot of snobbish people don't like the culture of Texas because they find it a little too I don't even know how to parochial or backwards in their mind or not progressive. But some of those people still move to Austin, Texas, which has a very liberal, left-leaning vibe. And then the more moderates and conservatives are okay moving to Dallas, Houston, or to a lesser extent San Antonio as well. I mean, there's four very large cities in Texas, which most states don't have. Most states in the U.S. have like uh, a capital city, which is the largest economic driver of their state. They don't usually have four large cities in one state.
Yeah, and that's what makes again Texas a good place for companies and people to move in. It sounds like there is diversity, there's jobs, and obviously I like to cover a few aspects, while we're here on the topic because you're also with the border, you know, and you kind of, as far as we see just the statistics and data, which of course is available for people to check, the numbers are staggering. I mean, I'm talking about migration, and that is happening right now. We're seeing that in Europe. The numbers are, I don't know. I should have done a bit of research before I came in just to see what the numbers are right now. But we're talking tens of thousands of people moving in Europe, moving in US through, and sometimes through the borders of Texas, right? So
Yeah.
how is Texas is handling the migration situation? Because obviously we're talking about jobs. Eventually, these people would want to work, I would assume, if they're going to stay in Texas, and obviously living conditions. So how is that affecting jobs, markets, and obviously real estate in general?
Well, in general, if you're a real estate investor and you're in construction, uh, you definitely have people working on the construction jobs where you might have to take a don't ask, don't tell policy regarding where they're from. So construction is very dominated here by certain types of labor. In terms of the rest of your questions, a lot of it's political. I don't go to the border of Texas, but the conservatives will say that during the liberal administration, they don't have a border; they just let everybody through. And then the liberals will say during the conservative administration, they shoot the people on site when it's like the North Korean border or the DMZ where no one's allowed through. I don't know what the real situation is. I'm not an expert on following that trend.
That's right. So, all right. So, and now with that, so obviously we're looking into, I think it's November 5th, you having an election, right?
Yep, in the US.
Yeah, November 5th. So, and obviously during, politics is one thing that people get very edgy, they get edgy, they jump from their seats, and, they get emotional, which I understand, the reasons behind it. But, looking obviously, and I don't know, which party or which side you're going for, and obviously it's your own personal decision, but looking back at, for example, as Donald, and obviously it's crazy what's happening. I mean, the entire world probably seen the case with Donald Trump, and the shooting that took place, which is very unfortunate. The things that are playing out sometimes, but with his time by being a president, and obviously I'm looking at some statistics here, in terms of real estate, because obviously he's a real estate guy, right? And you having a president as a real estate guy, so that affected real estate industry in many positive ways, right? Talking about tax cuts and jobs act, then obviously lower interest rates, economic growth, stock market performance, and there is a list of things that you guys can find online, right? So how do you think the next election, regardless who's going to be, how is that going to affect US in general and Texas as well?
Well, for sure, it's going to impact the U.S. So I'm not particularly political myself. My one vote does not really matter, and I live in what's called a red state, so it's heavily Republican anyway. So unless nobody bothers to vote, I already know what the result here. The state is so heavily Republican that the Republican Party could trot out like an actual physical duck, not Donald, like an actual duck, and then people will probably vote for the party anyways, and the duck would get elected.
Interesting.
Like it doesn't even matter who it is.
Yeah, I see. So look, again, now we're talking about real estate, because obviously I'm sure that people came here to really hear some advice, which again, you're an attorney specializing also in PPMs, private placement memorandums, syndications, real estate documents, contracts. So maybe we can talk about that a little bit more, and especially for newer investors. I'm sure there's people listening who are looking to venture into syndications. If that's the case, investing in multifamily, which Texas, there is some great statistics, as you mentioned a little bit what's happening right now. Great opportunities in Texas. But when it comes to the investors and the ones who are getting started, already have, a few units, and they're looking to kind of transition into multifamily syndication. Speaking about PPM, like, I think it's going to be beneficial to hear for both sides. What should be in a private placement memorandum?
Yeah, there's certain things that are required by law that need to be in there, certain disclosures. Generally, your PPM is a marketing document where you're pitching your investors, hey, we're great. We're doing this project and we expect it to be great. However, here are all the risks. So please don't invest money that you can't afford to lose. So that a lot of it's repetitive. So you're going to end up saying the same thing several times in slightly different formats, just because lawyers like to be conservative and assuming a bad situation where the economy turns or you just do a really terrible job at operating the property. What you don't want is your investors coming to you and saying, hey, you did all this bad stuff, we're going to sue you, right? You want to have as much disclosed as possible so you can point and say, hey, did I not tell you that interest rates could be a risk? Or, hey, did I not tell you that the court system, depending on COVID or who gets elected, we might not be able to evict the bad tenants very quickly. It might take us a while. So then we're going to lose cash flow. So you want to be able to point to all of those factors and say, hey, I tried my best. Sometimes things don't work out. So here you go.
Mm-hmm. And things do not work out sometimes, right? So
Almost anybody that bought in late 2022 to 2023, it's not working out right now.
And why is that?
That's a macro. That's just a macro thing.
Yeah,
Rates went up too fast. So you bought at what you thought was market value
right.
On, say, December 2022, and market value is now 40% less.
So they bought more of an appreciation rather than a cash flow.
No, it's just no, I wouldn't say that. It's so markets change all the time. I mean, the best example might be the stock market. You might buy Nvidia stock January 2024, and then it goes down 20% over the last month. Like it's just how markets work.
Yeah.
There's no, when you try to sell it, there's buyers that don't want to buy it at the price you bought it at.
Yeah.
And that's the same for real estate. Real estate is a highly interest rate sensitive asset class that's primarily based on buyers buying property with leverage.
Yeah.
So if it costs them 12% interest rate to buy your property, they're going to be able to pay you a lot less. They just can't pay you as much.
Mm-hmm. So
if
basically,
interest rates are 2%, they can pay you a lot more.
Yeah. So the debt went up, right? So the monthly debt finance, the debt payment went up, plus probably
Yes.
there I don't know how many of those syndicators, because I've seen and I've been doing a few of those interviews, not many syndicators or real estate professionals in general talking about management. I don't know why. Maybe it's but at the end of the day, like, you can go and buy an existing business, and that's what you're doing with the multifamily syndication, right? Same with the franchise. You can go and buy a KFC, a McDonald's, a Burger King, or any other franchise. But how are you going to manage that? How are you going to run the business? It might already have a system, but it's up to you to manage that and make that even better in terms of performance. So obviously, maybe it's not, again, obviously specialized in, but how do you believe that is an issue with the multifamily investors in general, just management?
That's not really an issue. You just have to select the best management and you have to do the best job. So some operators either aren't experienced or they made a bad choice and they'll do poorly. And this is not like a grade inflated university where everybody gets a 99% just for showing up. So some people will do worse and some people will do better. But that's a constant though. That has nothing to do with interest rate. The bigger macro factor right now is just if you bought something in 2022 at whatever the market price was in 2022, it's just worth like 30, 40, 50% less right now. You can't sell it for as much as what you bought it for. So you got to wait. You can't really operate out of that. Like, unless you double, you can't increase your rent 100% so that you can sell it for more, right? I mean, that's a macro factor. That's a huge headwind that's blowing in your direction.
Yeah, which, unfortunately, those properties will come back to asset managers, banks, right? Some of
They could, or if you can hold on to them, just wait 2 years or wait a year.
Right.
I mean, if you are actively trying to sell your property right now, you are choosing to sell it at one of the worst times possible.
Yeah.
So if you don't have to sell it, I would say don't sell it.
Yeah. But right now, speaking, because as looking at the market right now, there has been you talked about construction and just generally in the United States, and there's statistics. I looked at the statistics. Let me pull maybe the numbers up, and we can talk about it a little bit more. So in general, since let's see, I'm looking at the Q3 2020 and 2022. We looked at 100,000 new units. Looking to, I'm talking about permits and starts, right, to build properties. And now at the Q1 of 24, 140,000 units, right? So obviously before, and that's only the construction side. So and that probably, if correct me if I'm wrong, doesn't show up in the unit counts in terms of the economy until the units are being fully built, until the properties are being fully built. So what we're going to be looking right now is so much supply in a marketplace that will be available in 24, 25, 26. So how is that going to affect the people who are managing these properties? And you're saying if they're going to extend another few years and try to sell it, but at the same time, if they're having those extra additional units, which again, 140,000 units are going to be available in the marketplace. So how is that going to affect that selling strategy?
I don't really think you change your strategy at all. So there's always going to be new starts. They're going to be completed at different times. Some of them may give up. Some of them may change course. Some of them may take 2 months to build. Some of them may take 2 years to build. There's generally speaking a housing shortage in the United States. So even with new units coming online, it's not super clear if that's going to truly flood the market enough to really bring prices down.
Mm-hmm. Yeah. Well, yeah, that's a question. Yeah. So speaking about the other documents, so you talked about the PPMs, which is again things that it should include, and obviously for the passive investor, I think it's also good to hear that they should be paying attention to these things, right? That everything is very cleared and outlined. People should not be investing with somebody that doesn't have a PPM, right? In the first place. For the syndicators, if we're talking about other real estate documents, so for example, maybe talking about letter of intent or purchase sales agreement. So how those documents look like? I mean, do you help investors with those?
Yeah, we do those.
Yeah.
Yeah, we do those. A letter of intent, typically an experienced investor will just do that themselves to save on cost. That's usually just like a 3-4 page, almost non-binding document that says, hey, I like your property. I want to offer this much. Can we get into an exclusive period so that we can negotiate an actual purchase and sale agreement? Purchase and sale agreements, I don't recommend even experienced clients to do themselves. There's quite a lot of legal, that's usually 20, 30 pages with a bunch of contingencies and exceptions and things. So that's probably more important for an actual attorney to draft and to negotiate with the other counterparty. And as part of that, we're also partners with a couple of different title companies. So we have the ability to be the lawyer and to be the title and escrow agent on deals as well.
And there are some mistakes that investors are sometimes making when it comes to PSA, right? Because you can extend it at least a few times, and that should be in a contract in case you cannot close on time, right?
Yeah, a lot of people build in conditions for extension at the outset. For example, putting in additional amounts of earnest money, or if there's some sort of issue with due diligence, then some sort of automatic extension. But remember, a contract is just a contract, a private agreement between parties. So as long as it's clear, it can be amended regardless. So even if we don't have an automatic extension in our language, if I come to you and say, hey, man, who else is going to buy your property? Like, aren't I the only serious guy? And then you might say, yeah, you're the only serious guy. So let's just extend 30 days. So it also just depends on what's going on in the marketplace and how our relationship is and whether you trust that I can actually perform and whether you think I can actually raise the money, get the debt, and actually buy the property. Because usually sellers, they have one purpose. They just want to sell the property at approximately the price they thought they were going to get. They don't really want to be nickel and dime. They don't want to think they're selling it for $2 million and then they get like 50 cents at the end.
Yeah. Yeah. So, and especially when it comes to finding those deals. So when a newbie, a new investor, I mean, because LOI is LOI, it's not, as I mentioned, the word is non-binding, right? So that means you just provide an LOI saying that you are willing to, you actually can close, and these are the terms, and this is how, how long it might take you and whatnot. But LOI, I mean, anybody else if you brought an intention that you're looking to purposely buy the subject property, anyone else can submit it as well. So when should a PSA come in place for those investors so they might not miss out on a possible deal?
When the LOI is signed by the seller and the seller agrees to an exclusivity period, that's when I say you should get a PS. I mean, you can do it at any time. It just depends on how much time and how much money you're willing to spend. So a lot of buyers don't want to start hiring their lawyers until their letter of intent has been signed by the seller and there's an exclusivity period, which means the seller isn't talking to 50 other buyers at the same time. Because what you don't want is you don't want to pay your lawyer $5,000 to draft a PSA, and then as soon as you send it, the seller says, "Oh, I'm sorry, I already agreed with this other guy. Like, I don't need this." So you have no way of getting your $5,000 back unless you're friends with your lawyer and they just write it off.
Yeah. Unless you're friends with Ethan here, maybe he can cut you a deal. Which
Yeah, I'll write off some. I'm not writing off the whole amount. I would have probably charged you up front, by the way. So, and then even if your lawyer is a friend of yours or you give them a lot of business, they write it off. How do you get back the 30 hours you spent?
yeah.
If you can you invent a time machine? And if you can invent a time machine, can you please call me? I've got several mistakes I need to go back in time and correct.
Look, we all do. I would be very happy to talk with those people as well.
Yeah.
Look, anything else that we're missing when it comes to just generally documents? Because again, you're dealing with syndicators. You're dealing also with the people who do construction, right?
I deal with all kinds of stuff,
All
including
kinds.
just operating companies. I mean, I do a lot of real estate now because I've been a real estate investor for 10 years. So my network is really real estate driven. But
Yeah.
for example, I've done the purchase of a bagel shop. Nothing to do with that did not come with the property. They lease the property. Uh, I've done legal work for a company based in Cyprus in the Mediterranean. I took a don't ask, don't tell policy. I don't know if they're laundering money or not. Don't care. But that's the only thing that Americans know about Cyprus is it
Yeah.
was a money laundering hub for years.
Wow. Wow. Interesting. Bagel companies also free bagels. Here you go.
Bagel shop. No, they did not even give me a free bagel. They made me pay for my bagel when I got it, and it was okay.
Interesting. Interesting. So, and right now, so again, if we're talking about just generally deals, right? It sounds like it might be a good time. Which again, you can find markets within markets, these pockets, regardless of the cycle that you're in. If everybody's selling, you might be buying. If they're buying, you might be selling, and those pockets are available. Like where I am in Europe, in US, you can find them. So, but the one thing that again is a big piece, right? So team, then obviously understanding what you're doing, that's where the team comes in, but the funding and obviously the deal is what makes the project a success, right? But talking about the funding, and obviously that can become right now an issue, and depending where you're speaking of regarding the interest rates. But as far as a buyer says that you also provide gap funding, right? So maybe you can explain to the people what gap funding is, how it can help GPs close the deal successfully, especially when they need that additional funding. If somebody dropped out, right, a large investor dropped out, they get they need that cash to close the deal. And how is that different to, let's say, a bridge loan?
Sure. Yeah. So I'll take one step back. So I just do all kinds of loans. I use my personal money, or occasionally I'll partner with some of my friends or something like that to do a deal. So what I'm looking for is a low risk, high return, a short period of time. That's really what I'm looking for. So I'll give two examples. So you started alluding to one that I had sent you, and it's on my LinkedIn profile. But I'll talk about both because I find them both to be interesting. So a couple of weeks ago, somebody emailed me on a Tuesday night. They said we're buying an apartment building in Florida. Our earnest money is 475,000. Here's our purchase and sale agreement. And I said, this is great. I just met you. I'm not comfortable sending $475,000 as an earnest money loan. So can you explain to me why this should be attractive to me and why the risk is low? And they said, oh yeah. The risk is low because we have 30-day due diligence period. So this earnest money is fully refundable in the first 30 days. and we'll, our partner just had an issue where he couldn't provide it, but he'll be able to provide it within 30 days. So you just lend us the 475K for 30 days. You're fully protected because you can withdraw the earnest money at any time. And then we'll get our partner to pay you back the earnest money when it does go hard. So like at day 29, you'll be reimbursed and we'll pay you the interest. And then you're out of the deal. You don't have anything to do with it. I said, okay, great. So let's just go confirm with title and escrow and make sure they all understand all of that. What I don't want is I send in 475K and then the next day you terminate the contract and then you go demand that you get sent the 475K back. That's not even your money, it's my money. They say, yeah, understood. So we went to talk to the title company. It happened to be owned by a law firm that I'm a client of, so I knew they weren't going to defraud me. So we set up a contract where I'm the only person that can control the earnest money, not the buyer. So basically what I've done is I've made a 475K loan for 30 days, which basically has no risk to me. So that's a very interesting type of loan. I would do that loan every single day. I will drop everything else I'm doing, including my 5 children, to do those types of deals because there's essentially no risk. So that's one example of a gap loan. So that's more of a emergency earnest money loan, right? If they didn't send in that money on Wednesday, they would have just lost the deal. The seller would have said, I can't take you guys seriously. Like, you guys can't even come up 475K on a $50 million acquisition. Like, just get out. The deal that I posted on my LinkedIn and which you and I talked about is a deal that's similar in some ways, but that was a deal that was almost closed. So they needed to raise $10 million of limited partnership capital. One of their earliest investors was somebody who had committed $6 million based on a 1031 exchange. So anybody that knows 1031 exchanges knows that they're a little bit complicated to execute and they're really annoying to do. So 2 weeks before closing, that $6 million investor came and told the sponsor, hey, I'm not able to get this done. I'm not going to be investing in your deal. So now the sponsor has 2 weeks to run around to raise $6 million. So they did not set up a money raising apparatus before because this was one of their earliest investors. This was their anchor investor that they had assumed was going to come through. So they had to run around with like a chicken with their head cut off trying to raise $6 million in 2 weeks. In that particular situation, the seller was not interested in giving them an extension. The seller said, we are very, very happy to take your donation of $850,000 of hard earnest money. We would be more than happy for you to default on the contract. We'll go keep that 850,000 and then we'll just go sell it to someone else. And thank you for your 850,000, sir. So the sponsor was in a tricky spot, didn't want to lose the money, didn't want to lose the deal. So I met him and we replaced the $6 million. And then within 90 days after closing, he brought on more capital partners to help him raise money. They raised the additional $6 million and they paid me back. So I like that. So that was a short-term loan.
Mm.
A bridge loan is completely different. Bridge loan just usually means a permanent loan. Even though it's called bridge, these loans are usually 5 years long. So it's just, it's not an agency loan. It's not backed by the federal government, but it's typically like a 5-year loan. Could be floating rate, could be fixed rate. You could buy a swap where it becomes fixed rate or whatever. But that's not what I provide. I provide an emergency loan. I joke about it like it's a ransom. You have to pay a ransom to save your son. This is the type of loan I provide.
Well, that's great. Yeah. Again, just like the story with the $6 million. I mean, wow, that's pretty. Yeah, I can't imagine the stress that human had to carry, which
I was stressed making the loan, so he was
yeah, I'm sure.
probably 200 times more stressed than me.
Yeah, I'm sure. I'm sure. Look, regarding of gap funding, can you talk about just, you know, interest rates? Do they vary? I mean, because it sounds like it's very flexible in terms of just the structure of it, right? So
It's
how does the interest rates vary, and is it based on the size of the property, and how small is too small or how big is too big?
great questions. So it's flexible because it's usually my own money. So I can basically, it's a free country. I can essentially do whatever I want. Sometimes I'll do great, and sometimes I might not do as well, and sometimes I just might not. I just do okay. So here's how I price it. I price it based on risk. So the first example I gave, where I don't really have a lot of risk, that has more room to be negotiated to be a cheaper rate. Because if something's not that risky, I find my risk adjusted yield to be sufficient. On the second example of the 6 million, that was a bigger amount, and it took them 90 days to pay me off, and there was risk. What if this deal sucked? What if the markets changed within 90 days, and then the deal that he just bought was no longer any good, and nobody wanted to put any money in? So now that means I'm stuck with this guy. I might have to wait 5 years. So instead of a short-term loan where I'm supposed to make a high interest rate, I just might be stuck in a deal for 5 years, and who knows how it'll perform. So my pricing is primarily based on risk, but it's always high. It is meant to not be your first choice, second choice, third choice, fifth choice. It's meant to be your 79th choice.
Mm.
So this is a situation where, I'm half joking about the ransom. This is not really a situation where I expect you to come to me and you start nickeling and diming me down. It's just not what this is. This is a, hey, you have an emergency. I'm one of the few people that's always going to keep a certain amount of liquidity. I'm a lawyer. I have a flexible schedule. And quite honestly, if you pay me enough, I will drop everything I'm doing, including my 5 children, and I will go work on this if you pay me enough. So there's not a lot of people like that who exist in life. So that's what it's really based on. And it's also based on collateral. So a lot of times people have great collateral they can pledge, so it makes the risk lower. Sometimes people have very crappy collateral to provide. Maybe they can provide a lot of it, but it's all crap.
Mm.
So that's how the pricing works. It's primarily a function of risk, and to a lesser extent, it's a function of how big the deal is, how long it takes. So in terms of too small, we've generally found deals under 75,000 to be too small to mess with,
Mm.
because even if you charge an outrageously high interest rate, let's even call it a 500% interest rate. We charge a 500% interest rate on 75K for like 2 months. That's still not a huge amount of total
Mm.
dollars we're making,
Yeah.
even though
Yeah.
that's an outrageously high interest rate,
Yeah.
right? So in certain situations like that, we just impose like a minimum fee, maybe 25K minimum fee or 50K minimum fee,
Mm. Yeah.
which makes it less attractive for the borrower, because it's just, it's such a high interest rate. So I encourage them not to really think about it in terms of interest rate. I just encourage them to think about it as, what's it worth. So like in the example of the sponsor that might lose 850,000 of earnest money, theoretically I could say, hey man, how about I charge you 849,000? You're gonna lose 850,000 anyways. How about I just charge you 849,000? This is that's not what I did, but just use that as an example.
Yeah. Yeah. Yeah.
You're
Yeah.
about to lose 850,000 and the deal. How about I charge you 849,000 and you get the deal? How about that? That's still better than that's
Yeah.
better than your base case.
Yeah. But again, as a thing, so gap financing is almost like a last resort that you want to go to, right? Again, when you're having
I
debt,
should be your 79th choice. If
yes,
I'm in your first three choices, you're already rejected.
yeah, 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 yeah. Which again, as you talked about, because I just know, because I speak with so many people in US and different markets in Europe as well. Which most of the real estate investors, so we're speaking about indicators, they're not really born into this, right? Maybe as we mentioned, Trump and his family, right? Like they're born into,
Yeah.
and we have lots of these people. Like there is self-taught, right? And you see this thought leadership. They do this, they do podcasts, they go on and networking events and conferences, which is many of them, and they start making those mistakes, right? And financing becomes an issue. They kind of close, or they're just depending on a few people. Sometimes people lazy, right? They don't build enough of those potential accredited, non-accredited investors, the list to close the deal, and that becomes a choice for them. They have to start running around and find the money to close the deal. And if it's through the hard money lender, if it's through gap financing, if it's through, because not everybody can qualify for institutional loan, right? Again, if you especially have no history, right, unless you have partners that can run you through it.
Yeah, that's a great point too. So one of my business, like my core business model, is actually meeting a lot of syndicators so that, in case they don't qualify for a loan because they don't have enough net worth, liquidity, or experience, I offer to be brought on to their team and I would sign on the loan with them. And
Mm.
then the gap financing evolved when a lot of people said, "Hey, that's great. We don't need that." And then we also don't need you as a lawyer. We've been working with our lawyer for 5 years, and even if they're not that good, like we're gonna just keep them because of the institutional knowledge.
Mhm.
So now I offer multiple things. I'm like, okay, cool. I can sign on your loan. If you need me to lend you money, I could do that. And if you don't really like your lawyer or they're too slow, you can hire my law firm to do it. So I offer multiple things to the same client avatar.
Yeah. So, and how does it look like, just for people to understand? So, if you're becoming a loan guarantor, right? You're signing a loan for them. So, so people don't get confused, maybe, because obviously there is different people who can guarantee a loan for them if they don't have the net worth or experience. What's the percentage that people should look like or should be aware of? Because I'm sure people are getting scammed or being kind of forced into situations that they want to be in.
Yeah, I don't know if they're being scammed, but so here's how the
Maybe it's
commercial
a big word.
here's how the commercial and multifamily financing markets work in the US generally. It's worked, I believe, like this for the past couple of generations. So a lender, which could be a government-backed lender, it could be a bank, it could be a private equity firm, it could be a publicly traded company. There's a lot of mortgage REITs, real estate investment trusts, publicly traded that exist in the US, like Arbor, Ready Capital. There's a bunch of these that provide loans. They operate similarly to banks, but they're publicly traded uh, corporations that don't have the exact same compliance as a bank. But generally speaking, what they say is we need warm body guarantors. So find me real life people that are willing to sign this personal guarantee. So that if something goes wrong, let's say we lent you $10 million and you could only sell the property for 8, you owe us 2 million. We want the ability to go after these live bodies and sue them and make them pay us that $2 million later.
Mm.
Whether or not they do it, that depends on their institutional policies, what the market is like. Like in 2008, when everybody failed, I don't think a lot of lenders actually went after personal guarantees because it was still a waste of time and
Mm.
money in the legal system. So they typically all have this requirement, which is the live warm body guarantors. They need to have a collective net worth that's higher than the loan amount. So if it's a $10 million loan and then you have 9.99 million of net worth, you don't qualify. You have to bring on somebody else to get over the 10 million hump. And then let's say you have 10.01 million net worth. Great, you satisfy that bucket. But now they say you have to have 10% of that liquid. So show me 10. So show me $1 million liquid. So you might fit the net worth requirement, but
Mm.
you might not fulfill the liquidity requirement. So then you still have to bring on somebody like me that has liquidity. And then sometimes people don't meet either, and they need somebody for both. And then sometimes there's people doing houses in Ohio or New York, and they want to come to Texas in similar business model, and they're very good at what they do. They have the net worth and they have the liquidity, but the lender says that's great. We need you to find another live body that has Texas experience because we think that's different. And for us to mitigate our risk, add somebody from Texas. So then I say, oh, hey, I'm from Texas. I've done deals in Texas. I've done deals in North Carolina. I've done deals in Arizona, blah, blah, blah. So that's what the loan guarantor thing is. So a lot of newbies, they're already going to have to partner up with somebody anyways. And one of the things they're going to need is somebody to have sufficient net worth, liquidity, and experience to get approved.
And maybe sometimes that means giving away a substantial amount of deal just to be able to.
Absolutely. Absolutely. I mean, substantial. Yes, let's just say substantial because I'm on the opposite side of this. So as much as humanly possible. But in general, I'm joking. It shouldn't be that substantial. Like it's a valuable component, but it's not the most important component.
Mm-hmm. Mm-hmm. Yeah.
Ultimately finding the deal at a good price, I think, is the most important component.
Yeah.
And then executing on it, not like an idiot, and hopefully optimizing
Yeah.
is good. And then third, I would say, is optimizing financing.
Yeah. 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 Yeah.
I mean, ideally, you optimize all three, but if you had to choose in ordinal manner, I probably myself choose that way. Because you could have crappy financing, you could operate it at average, but if you bought it cheap enough, you're gonna make money.
Mm-hmm. Yeah. Yeah, exactly. Because the deal is what makes the deal, work, right?
But the price, it's
Yeah.
really the price.
Yeah,
If you
exactly.
can buy something stupidly cheap, you could run it terrible. you could have bad financing and you could still make money.
Yeah. I mean, there's so much, again, especially for new investors. There's so many different pieces. So moving at the same time, especially when it comes to syndication. I mean, there's list of things. But speaking in Texas, I mean, for new investor, because I would assume, right? So now, even speaking, go back maybe to the market that, I see right now in US, there are new markets popping up that wasn't popular before, right? And that's, especially
Yeah,
when it,
Midwestern markets are getting more popular because there's more cash flow. Because Texas is becoming a little bit more expensive, for example.
yeah,
A lot of investors piled into the Southwest and Southeastern United States. So Austin, Texas became an overcrowded market. Phoenix, Arizona became an overcrowded market. I think Florida is becoming overcrowded in general in terms of the demand for investments versus the supply of good investments. So I see people going to Kansas City, Ohio, Milwaukee. One of my friends told me like a bunch of Israeli investors are showing up to buy houses in Milwaukee. Like they've never even heard
yeah.
of Milwaukee last year.
I'm looking at the Zillow statistics, and that's the predictions for the
Mhm.
hottest housing markets 24 in Buffalo, New York, Cincinnati, Columbus, Indianapolis, Providence, Rhode Island, Atlanta, Charlotte, Cleveland, Orlando, Tampa. I mean,
Yeah,
and there's a lot of these markets that were popular before, and that's what I mentioned, the pockets. And again, so I think that's one of the big pieces, right? Because some of the markets that you might be investing in, and I don't know, again, because jobs are driving that population. That's what you want to, I guess, focus on, right? But a lot of things changing because of the migrations that taking place in Texas. As I said, it's being affected a lot by it. So I'm just interesting. I'm observing from far where's that migration going, and obviously, and how is that affecting the prices at the same
yeah.
time.
No, I think the biggest migrations are out of New York City, Chicago, and San Francisco into cheaper, warmer climates.
Oh yeah, the Sun Belt. Yeah, everybody wants that. Yeah. So what do you think the future is going to look like? Talking about also your career, because I work a lot with the marketing people. What our company does, Upskillre, we provide on-demand courses. We do different events, virtual events. We did in-person events as well. Where do you see right now with your job, or just in general speaking, like with the real estate transactions, emerging technologies? How is AI playing into that? Because now I started looking at the investors. There's a lot of investors using now AI and different softwares and tools and for transactional purposes, finding deals. So how is that shaping the real estate industry?
So far, I feel like the current iterations of AI are not really strong enough for me to truly view them as particularly valuable.
Yeah,
I have some anecdotal examples. I'm a law firm, so a lot of times people pitch me products aimed at lawyers, and I do the test runs and the trials just to see the work product is too crappy. Like I can it's not even usable. So
yeah.
let's not even talk about I could bill a client for it. I can't even use it myself. I just have to redo it. So the current iteration is not strong enough for legal work, or at least the legal work or the quality I'm used to. And then I have a few people, they're more like wholesalers where they're just looking to do anything. They're too lazy to even analyze or read deals. So they run it through an AI and they actually
I see that.
say, I did not read this at all. Here's what AI says. And then it spits out a bunch of stuff. And I'm like, man,
And
you're
people
this.
making investment decisions based on that, right?
Well, I mean, my investment decision is almost always reject because I say, well, if you're so lazy that you can't even read it yourself, and you tell me in the email that you didn't read it and you just ran it through I don't really even know what value you've added here. You're just like you want to get paid just for emailing me something that you took 7 seconds on and you didn't even open the file. So I'm skeptical right now. I think AI will be important in the future. Just the current iterations aren't very good.
Yeah.
And then just on the social media stuff, I'm sure anybody that's on social media, you get pitched all kinds of garbage or all kinds of weird stuff.
Yeah.
Sometimes if I'm bored or I'm in a meeting where nobody needs to hear from me until the very end, I'll just engage with the AI bot and just test it. I'll say outrageously crazy things just to see the reaction, and it's not very good. Like I'll just give an example. I think one was like a it's probably like a robot pretending to be a woman that wanted me to sign up to like chat with her in private so she could steal my money. And I just kept telling her like I'm only attracted to men. And she couldn't get this concept.
Mm.
So she kept this is all just a joke, right? I'm just joking around with it, but it didn't even end. So it kept on going on and on, not understanding like I gave her the opposite response of what she wanted to hear. And then I told her to send me money first. And she still went on and on. So it's not working. They should say this is a guy that's joking around with us. Delete him. Waste of time.
So
So
I think AI where is being used right now is obviously, I mentioned the big word, scamming, right? There's a lot of
yeah,
scams
huge.
taking place right now, especially when it comes to financing, rent, vacation rentals. I mean, so maybe you can comment on some of it, because obviously,
Crypto scams. I mean, there's all kinds of scams everywhere.
yeah, but especially with the financing and with real estate, because obviously, I keep hearing stories, of people, receiving bogus emails, text messages from so-called, attorneys and saying, okay, you need to sign this so we can faster close this and whatnot, and it's all fake, right? So, have you experienced any of it, from your clients, your
Oh my
people?
God, absolutely.
Yeah. So
Absolutely.
what's happening and how people can avoid those scams?
Avoiding them is extremely hard. Clever scammers can be really, really good. Not clever scammers can be really bad. So, like the joke I was making, where somebody says, "Hey, pay me money," and do a private chat, and you say, "I only like men."
Yeah.
They still like that's just not a clever programming. Like that's a waste of time. So I do transactional loans. So there's certain deals out there where a wholesaler is buying a property cheap from a seller, and then they're not going to own it. They're going to sell it to
Mhm.
another buyer, and they're going to make a big spread, and they don't want the seller to know, for example, that they're buying it for 100K and then they're selling it to a guy for 150K, and they're about to make 50K for not doing what is perceived as not doing that much. They don't want the seller to know that, hey, the seller could have actually just sold it for 150K, and they don't want the buyer to know that, hey, they could have come to the seller and bought it for 100K, right?
Right.
So they want to hide that. So in situations like that, what they need to do is they need to borrow 100K to actually buy the property from the seller for 1 second. And then 1 second later, they're going to sell it for 150K to the buyer. And then the buyer won't know who the seller is. The seller won't know who the buyer is. And then the buyer can't find out that they're paying 50K more. And the seller can't find out that they could have sold it for 50K more. So in situations like that, I'm more than happy to make those loans. Those loans are almost all risk-free, all handled at title and escrow. Money goes into title escrow, money comes right back out with a small fee, but risk-free. So I love stuff like that. Fast money. I had a guy, he made up an entire title company. So he made up a website for a title company. He had another one of his friends pretend to be the escrow officer. And then he was running the emails for all of them. So he messed up in an email chain. So it was him, myself, and the title officer. So he pretended to be the investor. He was the investor buying a property, either transactional loan. I'm the lender that could fund the transactional loan. And then there's the escrow officer at the title company that he completely fabricated that was handling the transaction. So he had the escrow officer call me. It was a different guy. It wasn't voice modulation. So it was some sort of Confederate. They're in cahoots. But he made one mistake and I caught it pretty early. So I think I wrote some email saying like, please send me your licensing and your driver's license. And this was aimed at the escrow officer, not at the investor. And then the investor, he replied back. He said, as a title company, we've never been asked this. And I was like, I caught you there. You're not the title company. You're applying from your investor email. So you control both emails. You fucked up.
Yeah.
And then I Googled him and he's been running the scam for years. So
Wow.
people have actually fallen for this and wired money to a fraudulent title company that doesn't exist.
And that's just one of the stories, one of the many, which is unfortunate.
And that was not a terribly run scam. That was a reasonably well thought of and probably works a decent amount of time.
Yeah, so I think I heard the statistics, which again I can Google that in a second. But the number I think last year was staggering. We're talking about 500 or 900 million dollars were lost in between scams. So we're talking about transactions, rent, people claiming to be, whatnot. And there's stories where if you put a property on a listing, and obviously it takes some time for an agent to, if it's a condo, a few units, right, to sell that property, might be in the marketplace for 30 days, right? So there might be a bogus owner come in, and if they have keys, they might a copy or whatnot, and they might be showing your property, they might rent for you, they might sell for you. I mean, it's crazy. People get creative when it comes to scamming, right? So
It's nuts. Yeah, I'm
yeah.
curious. Like in Europe, are there fewer scams in Europe in general? Is the law more protective of consumers?
It just depends country by country because it's just
Okay.
not like United States. Yeah, it's I would assume it's almost like similar or the same. Each country has their own regulations in place and policies and I mean people do get scammed. I would say more with vacation rentals because that's
Okay.
where you can, especially with Airbnbs, right? Because a lot of the owners, just because sometimes they want to be polite, they want to be nice, and they want, a renter to avoid additional fees that the Airbnb might charge. They might say, okay, let's go off the Airbnb, and you don't have to pay the spread, you don't have to pay the Airbnb fee. So let's chat about this, on
Mm,
Messenger or whatnot. So people sometimes get scammed with those because they don't even know those own those properties, right? They just have listings for
right.
those, just random. But for bigger transactions, just like multifamily, it's mostly run by institutional capital. A lot of it is from US, from Asia. So they're very sophisticated. Again, and we're talking about, 100+ million dollar deals most of the time, right? So,
That's
but
what I suspect.
yeah.
I lived in Hong Kong as an adult for 2 years, and the system there I feel like is a lot better. Like the United States system is not particularly protective for small to medium sized scams. Like
Mm,
if you lose 100K to a couple million, you got scammed by somebody. The system here does not really take good care of you. You're gonna end up spending a lot of money on lawyer fees to have uh a very random chance of collecting. Whereas I found like in Hong Kong, like in a lot of in a lot of countries across the world, I mean the government register is who keeps records of ownership of who actually owns what. In the United States, it's typically run by a title insurance company, so it's a
mm,
financial product, not a government product. So it's always interesting. There's a lot of title scams, and title insurance companies have to pay out millions or billions of dollars every year on
yeah,
scams, or somebody
yeah, yeah,
pretends to own a property they never did. Whereas, like in Hong Kong or some other countries, they're like, "What are you talking about? You
yeah,
just show up to this office, and we tell you who owns it.
yeah,
Like,
yeah, yeah.
what question do you have? Like,
Yeah.
we wrote it down. It's here."
So I think that's another important piece to mention for people when we talked about LOI, letter of intent. When you're signing a letter of intent, you should be aware that you're signing with an owner, right? And you have to make sure. Correct me if I'm wrong, Ethan. That the title is either on the owner's name or an LLC name, right? You need to figure that, right?
Yeah, you should do some basic. I mean, Google is amazing. If you just, if you're willing to spend 10 to 15 minutes on Google and click through the first 3 pages, I mean, you can generally find a lot of good evidence.
Yeah, it's all it's all online these days. Yeah, exactly. Look, so I guess we covered quite a bit. I Again, I would love to see comments. I would love to see what people think of this, and obviously how many
Yeah,
people are looking to invest in Texas as well. Because when you asked the question about Europe, that's the downside of it. If you're a new syndicator, if you're looking to syndicate, invest in real estate, especially multi-family properties, you know there is a big jump that you have to make. You're not going to become an institutional investor right away. So those smaller deals like you have in US for 16, 20, 50, 100 units, they're not available, right? At least to
right.
everyday person. So that's where they're looking to invest, abroad, internationally. And US is one of those places. And Texas is obviously being one of those states. So again, Ethan, I very much appreciate you for joining today, for providing these insights. Great chatting with you. Great to meet you. Obviously, LinkedIn. That's where I
Yeah,
recommend people to go and connect with you as well if they're looking for gap funding. They're looking for some legal advice for PPM structures and illegal document advice. If you're looking to do deals, because you work with people not only in Texas, you do nationally, right?
Yeah, absolutely. No, we do deals across the country. So, I lend money. I've signed on loans across the country. I'm a licensed attorney and title and escrow officer in Texas, but the securities laws and PPMs, that's a federal law. So that's good for all the states in the US.
Awesome. Okay, Ethan. Well, thank you for your time. Great chatting with you, and I
Thank you.
look forward to catching up next time. Thanks.
Awesome. Thank you, sir.